Let's talk now about my unearned or deferred revenues. The situation here is when I get paid in advance to do some work. I get paid in advance to do some work. Now, it doesn't happen in my life. In my life here, I work for a month and then I get paid. Maybe in your life, you work for 2 weeks and then you get paid and so forth. But in some businesses, it is common to get paid in advance. The one example I use the most is the one which is a stone's throw from here. If you had a really, really good arm, I could throw that stone a long way. What is that near us? The airport. The airport is a business that typically gets paid in advance. If you've ever flown before, you buy your ticket from them in advance, and then later on you take that flight. You don't fly on the airline and then pay them when you get off the plane, do you? So airlines typically get paid in advance. Landlords often get paid in advance. Magazine publishers usually get paid in advance. Those are kind of common areas where people get paid in advance. When we get paid in advance before we do the work, we have more cash, of course, but we can't say we have more revenue because to record revenue we have to do the work, and we haven't done the work yet. Instead, we say we have more of a liability. Okay, a liability, specifically we're going to call it unearned something, unearned rent, unearned fees, unearned subscriptions. We say we have a liability because we have an obligation to do one of two things. Number one is perform the service that we were paid for, and if we don't, number two, give them their money back. So when I get paid in advance, I debit cash to make the asset go up, and I credit the unearned to make that liability go up. Now, let me mention now that one thing I specifically do is I try to avoid calling an account unearned revenue, because I have found my students get so confused, and rightfully so with that. Because I've told you revenue is revenue, right? But then if I put unearned in front of it, well, I've told you unearned is a liability. If your book ever gives you the account of unearned revenue, it is a liability, okay? I will specifically try not to call it unearned revenue. I'll call it unearned fees or unearned subscriptions or unearned rent. But I will try not to ever put the word unearned and revenue together in an account title because I think that's going to confuse you. But if you see it together, the unearned trumps the revenue, okay? The unearned is the winner. It comes first, all right? And so that account would be a liability, even if they call it unearned revenue. I won't give it to you that way, though. All right, we talked about those examples then. The adjusting entry comes in at the end of the accounting period, and we have to ask ourselves the question, how much of that amount that I was paid in advance have I now earned? How much of those services have I now performed? If I've done the work now, I have more revenue, and revenue goes up with a credit. My debit goes to my unearned account. Why? To make that liability go down. Because if I've done part of that work, I no longer have as big an obligation, as much of a liability. I need to make it go down. The amount of that entry is how much I have earned, how much work I have done that I was paid for in advance, how much of that work have I now done. Okay, let's do an example. What page of the handout are we on? Page 17. We are a landlord. We are a landlord, and our tenant pays me $600 on December 1st for 6 months' rent in advance. My accounting period is the year that ends on December 31st. Now, when I get paid on December 1st, what do I have more of? Cash. An asset goes up with a debit, right? So let's debit cash. What else do I have more of? I heard prepaid, which is not the right answer, but I'm glad you said that. We'll talk about that later on. Unearned rent. Let's talk a little bit about that prepaid right now, because I always get that answer when I ask that question. Prepaid rent would be a great answer if this was the tenant recording the entry. To the tenant making the advance payment, it is prepaid rent. But we're not the tenant, are we? We are the landlord. We are the one receiving that payment in advance. And matter of fact, we'll have another section in the handout later on that talks about the difference between the prepaid and the unearned. Again, prepaid and unearned is the same transaction, but from the opposite party's perspective. Remember, like receivables and payables are the same transaction from the opposite party's perspective. If it's a receivable to me, to you it's a payable. If it's a prepaid to me, to you it is an unearned. Okay, but we'll come back to that. So we have more cash, an asset goes up with a debit. We have more unearned rent, a liability goes up with a credit. All right, why was it not rent revenue? Haven't done the work yet. And let me tell you specifically, let's think back to my rent, for example, when I paid my rent. We said when we pay something in advance, we have to ask ourselves the question, by the end of the accounting period, will I use it all up? Remember, if we paid our rent in advance, we'd say by the end of the accounting period, will I have used it all up? If the answer to that question is yes, I will have used it all up, then what did we call it? Expense. If the answer to that question is no, I will not have used it all up, then it would be prepaid. Okay? Same idea here. I am being paid in advance. We ask ourselves this question: by the end of the accounting period, will I have earned all of that? If the answer to that question is yes, by the end of the accounting period, I'll have earned it all, we'd call it revenue. But in this case, by the end of the accounting period, by the end of the year, will I have earned all of this? No. Therefore, I say I have more unearned rent, which is a liability. But then December 31st rolls around. Have I now earned any of that amount? How many months have I earned? There's only one way to get it right, and that's to use your fingers. All right. When did we receive this amount in advance? December 1st. The tenant has now, as of December 31st, the tenant has lived there for how many months? One. Which month? December. Very good. All right. So we have to look at the date on which that amount is received and when they moved in, and then count to the end of the accounting period, which in this case was a year. How much have we earned? Well, let's see. $600 covered what time period? 6 months. In other words, it was $100 a month times the 1 month. 100 times 1. How much have we now earned? $100. So as of the end of the year, we have earned $100. We need to make our adjusting entry for what we have earned, $100. Let me just stop right now and tell you, your homework could now say, instead of giving you all these dates, they could simply say that as of year end, you've earned $100 of that amount. If they tell you what you've earned, that's great. You say, thank you, that's the number you needed. Here's the other way they could do it. They could say by the end of the year, you have not earned $500. Of the $600, you have not earned $500, in which case you'd have to subtract to see how much you have earned. So you got to look carefully at it. If they tell you how much you've earned, great, that's the number you need. If they tell you how much you still have not earned, then you have to subtract. So I've earned $100 of that amount that I was paid for in advance. What do I have more of? More rent revenue. Very good. I have done $100 worth of work. Now, if you called it fees earned, that would be fine. We really would need to call it whatever our revenue account is called. What type of an account is rent revenue? Revenue, more of it says it goes up. How do you make revenue go up? With a what do I have less of? Less unearned rent. If they were to have a big party in my closet on December 31st and I was to get mad and kick them out, would I give them back all $600 they had paid me? No, because I've already done $100 worth of that work. Instead, I'd only give them back, what, $500? So my liability has gone down. The services I have yet to perform now has gone down. Unearned rent is a liability. Less of it says it's going down. How do we make the liability go down? With a debit. So my adjusting entry will debit unearned rent to make that liability go down, credit rent revenue to make my revenue go up. If we think of the credit before the debit, that's okay. We're just going to write the debit on the first line, the credit on the second line, indent it. Down below that, I've given you a T account. And remember, T accounts are a good way for us to quickly calculate the balance in an account. So if we make more than one entry to an account, sometimes I'll have us draw a T account to see what's in that account. Let's post that T account of unearned rent. Well, first off, my first entry did what to unearned rent? Debit or credit it? Credited it for how much? $600. And then my adjusting entry did what to unearned rent? Debited it for $100, leaving me right now what sort of a balance in unearned rent? $500 credit. $500 credit. Well, let's see, my rent was what, $100 a month? How many months worth of rent then is in unearned rent right now? 5. The 5 months that I still haven't earned remains in my books as a liability. Now notice I didn't make the journal entry for 5 months worth. I made it for 1 month worth, which took the 6 months worth, made it go down by 1 month. Now I have 5 months still as a liability in that account. And the ending balance in rent revenue, well, we just had the one entry. It was how much? 100, which was how many months? 1. So notice, I got paid in advance $600. The portion of it that I have earned is now revenue to me. The portion that I still have not earned stays on my books as a liability. Let's do another. I'm going to publish a magazine. My rent was cheap. My magazine's expensive. I receive $120 on August 15th for a 1-year subscription. I am the magazine publisher. I send out the first issue in September and my accounting period is the year that ends on December 31st. Well, let's first off, I want you to make the journal entry on August 15th when I get paid in advance for a 1-year subscription. What'd you debit? Cash. Why? To make that asset go up. And what did you credit? Excellent. Unearned subscriptions. Why couldn't I credit subscription revenue? Haven't done the work yet. Remember, the question is, by the end of the accounting period, will I have earned all of this? Well, no. By December 31st, I will not have earned all of it, so we consider it to be unearned subscriptions, which is what type of an account? A liability. Good. All right, that's not the adjusting entry. This is the Chapter 2 entry. The adjusting entry rolls around on December 31st. As of December 31st, how many issues have we sent them? 4. What's the only way to get that question right? Get your fingers. If we need the toes, we'll go to them also. Okay? What issues have we sent them? September, October, November, December. 4 issues, September through December. How much have we earned? Well, let's see. $120 covered 12 issues. So each issue cost how much? $10. And we have now sent them 4. 10 times 4 says we have earned $40. So we have now earned $40 that we don't have on my books right now. That is what my adjusting entry will be for. Now again, how could that be shown in your homework? Number one, they could say, of the $120 at year end, you have earned 40. They could tell you that. Or they could say, of the $120 as of year end, you still have not earned 80. If they told you how much you haven't earned, you have to subtract that from the total to see how much you did earn. What do I have more of? Okay, subscription revenue or fees earned. I don't care what you call it. You'd have to look at their chart of accounts and see what they call it. I heard cash, but adjusting entries never, ever, ever affect cash. The only time cash came in was back when they paid me. That's the only time I got some cash. We wish we'd get some more now, but we don't. What type of an account is fees earned or subscription revenue? Revenue, more of it says it goes up. How do you make revenue go up with a credit? Good. What do I have less of? Unearned subscriptions. If I were to cease publication right now, would I give them back all $120? No, because I've earned part of that. So my obligation has gone down. What type of an account is unearned subscriptions? Liability. Less of it says it goes down. Liabilities go down. How? With a... So my adjusting entry will debit the unearned to make that liability go down. Credit revenue to make it go up. Again, let's look and see what sort of ending balances we end up with in this account. Well, let's see. My first entry was a credit to that account of $120, right, for my unearned subscriptions. What did my adjusting entry do to unearned subscriptions? Debited it, made it go down by 40. What sort of balance do I have right now in unearned subscriptions? 80. At $10 per month, how many months does that cover? 8. Okay, the 8 months that I still have not earned stays on my books as a liability. What is the ending balance in subscription revenue? We only had the one entry there, right? How much was it? 40. How many months was that? The 4 months that I have earned are revenue to me. So notice, I got paid for 12 months in advance. Where did that amount end up? If I do the work, it becomes revenue to me. If I don't do the work, it stays on my books as a liability. The amount of the adjusting entry is always how much work I have done. All right, let's clarify a few areas. All right, let's move on and talk about something that we kind of hinted at just a minute ago, but this is a common area of confusion, and that is the difference between prepaids and unearneds. Prepaids and unearneds are both dealing with the exact same transaction, but from the opposite party's perspective. It's kind of like payables and receivables. If I owe some money, to me it's an accounts payable, but if I owe it to you it is an accounts receivable. If I pay for something in advance, to me it is a prepaid. But if you receive my advance payment, to you it is an unearned. So it is the exact same transaction, but from the opposite party's perspective. A prepaid to one party is an unearned to the other. So it's important when you read a transaction, you have to decide which side of that transaction am I on. Am I the one receiving that advance payment, in which case it's unearned? Am I the one making that advance payment, in which case it is prepaid? Let's do an example. Tom Tenant pays Lucy Landlord $3,000 for 6 months rent on October 31st. Well, let's do a quick math. How much does that come up to each month for rent? $500. 3,000 divided by 6 is $500 per month. All right, first off, I want you to be Tom Tenant. You are the tenant who is making a $3,000 payment in advance for 6 months rent. What did my entry look like? Debit what? Good. I heard two things. I heard rent expense and I heard prepaid rent. How do we know which it is? Well, you ask yourself the question, by the end of the accounting period, will I have used it all up? By December 31st, in this case, will I have used up all 6 months of this? No. Therefore, it is more prepaid rent, which is an asset and it's going up with the debit. What do I have less of? Cash and asset down with the credit. Good. And it's important you get that first entry right, because if not, then your adjusting entry is definitely going to be off. December 31st rolls around. Have I used up any of that prepaid rent yet? How many months? I heard 3, I heard 2. What is the only way to get the answer right? Get out your fingers. All right, when did we make the payment? October 31st. So what months did I use up? November and December. What if I had made the payment on October 1st instead? Then it would have been 3 months. Count on your fingers, and you have to look at the date in the month on which that payment is made. If it's made at the beginning of the month, then we're going to use up that month. If it's made at the end of the month, then we won't be using up that month. How much did they cost us? Well, 2 months, and each month is $500 each, so a total of $1,000 then. What do I have less of? It's prepaid rent. I used up part of it. Prepaid rent is what? An asset, and it's going down with a credit. When I use up an asset, it becomes what to me? An expense. So what do I have more of? Rent expense. Rent expense is what? An expense. More of it says is going up, and expense go up with a debit. Good. So my entry is going to be a debit to rent expense, and then a credit to prepaid rent. All right, that's the way it looked on the tenant's books, the one who is making that payment in advance. Now let's change sides. We are now a landlord. Let's make the entry whenever I receive that tenant's advance payment. Where did I debit? Cash Y. It's an asset. We're making it go up. Good. What did I credit? Unearned rent. Why not rent revenue? Haven't earned it yet. Remember, the question is, by the end of the accounting period, will I have earned it all? If the answer to that question is yes, I will have earned it all, then we would call it rent revenue. But in our case, by the end of the accounting period, by the end of the year, will I have earned it all? No. So instead we say we have more unearned rent, which is what type of an account? A liability. That is the key to getting all this corrected. You got to remember that an unearned is a liability. All right, that is the entry whenever I receive that advance payment. December 31st rolls around. How much have I earned? $1,000. We don't need to figure the number again, do we? It's the same number that the tenant had used up. What do I have less on? I have less unearned rent. If they were to have a big party and I was to kick them out on December 31st, would I give them back all $3,000? Well, no, because I've earned $1,000 of that amount. My obligation to perform future services or to refund their money has gone down. Unearned rent is what? Liability. Less of it says it goes down. How do you make a liability go down then with a debit? Good. And what do I have more of? More rent revenue. All right. Or you could call it fees earned is fine. Rent revenue is what? Revenue. More of it says it's going up. How do we make revenue go up with a debit? Good. So my adjusting entry will debit unearned rent. Why? To make that liability go down. It will credit rent revenue to make that go up. What is my ending balance in unearned rent? I didn't actually ask you to figure that, but what's the ending balance in unearned rent? $2,000. What is the tenant's ending balance in prepaid rent? $2,000. As of the end of the period, the tenant has now paid for 4 months they haven't yet used up, and the landlord has received 4 months payment that they haven't yet earned. So, same transaction from the opposite party's perspective. Just like accounts receivable and accounts payable were resulting from the same transaction from the opposite party's perspective. Now, sometimes I get students who get confused between receivables and unearneds. And these are exactly the opposite. Exactly the opposite. Not the same transaction, the complete opposite transaction. With a receivable, I've done the work and I haven't gotten paid yet. I have done the work and I haven't been paid yet. With an unearned, it's the opposite. I got paid, but I haven't done the work. Got paid, but haven't done the work. Receivable, I did the work, but haven't been paid. Unearned, I got paid, but I haven't done the work. So they are the exact opposite.